Number 4 of 7 of my list of modern philosophies of investing would be the dividend method. Now, as you get older, depending on what your quote unquote risk tolerance is, and talk about that in another video, your age and your risk tolerance would inform perhaps which of these methods you might adopt, and you might, switch from one to another depending on your age or whatever. If you're going a dividend method of investing, a lot of times what you're looking for is spendable cash flow. So as you get older and you're like, my time horizon for work is getting shorter, I'm not 20 anymore where I'm like, I'll take more risk and get more reward. I need the reward, man. I need the reward. As you get older, you're like, all right, well, I got what I got. And now I want to work less and I need my money to give me spendable money. You might look to dividends, and there's some kind of general, I feel like, feeling that dividends are less risky. A lot of people look to dividends, they're older, they want their dividends to be consistent, and they don't want their capital or the money they put in the actual stock to get the dividend, they don't want that to go down, right? So there's this kind of general overarching thinking that you're going to invest in these sort of very stable companies that have been around a long time. Maybe their stock price doesn't move much, and they pay a consistent dividend. And there is a whole list of ways dividend people track this called like dividend aristocrats or dividend kings, and those terms usually refer to companies that have not cut their dividend, but also have increased their dividend to some degree for many years in a row. And I think to be a dividend aristocrat, you have to have increased your dividend like 35 years in a row, or to be a king, you got to be 25 years in a row. That's a lot of years to increase the dividend. The problem I have with dividends is that they can cut the dividend at any time. There's no guarantee if you buy a stock today that, you're going to even get the dividend in a month. Actually, maybe it is a guarantee you'll get the initial quarterly dividend because you signed up for it and they were giving it away, but they can cut it at any time. Beyond that, if you go look at dividend stocks and the stock price goes all over the place. I mean, like ExxonMobil, for example, in the last 4 years, the stock price has ranged from as low as $30 up to $110. And before that it was like 80. So it went from like 80 to 30 back up to 110. So if you had like put a lot of your money, and that would have been considered a very high quality, low risk dividend stock, if you'd put your money in there, you'd be getting your dividend, but you got to watch your principal like sort of disappear, and you could like freak out and then sell and whatever. So, dividends can produce cash flow. And the more consistent the cash flow likely is to be, the lesser it will be. But also, you're invested in individual stocks, and they carry a fair amount of like capital risk. So dividends are sort of a confusing approach. And it's not all that different in just investing in stocks. And I would say in general, the risk profile is pretty much up there with investing just in stocks, Maybe a little bit less if you're really sticking in the aristocrats and kings. But it is a method. It is an approach. And depending on your age, it's certainly something you look into. I have a bit of funds in what I call a dividend portfolio, or I've had over the last couple of years. But the thing is, I wanted more yield, so I went a little riskier, And of course, like overall, the value of the stocks is down right now. Like I didn't necessarily care about the stocks going up because I was like, I just want the yield, and they might go down, but I'm going to get the yield. Well, the value is a little bit down right now, and some of them stopped, cut their dividend. So it's been like a thing. I've made more in dividends than the stocks are down, and I think the stocks will go back up anyway, so I'm not particularly worried about it. I think they'll do their job, but not a sure bet, but there is no sure bet in investing. So that's the dividend method.